we continue. All right. Good morning, good evening, good afternoon, wherever you're watching us from. This is Ezekiel Olande. This is Money Mondays. And today we are having a conversation that we think you ought to be part of. We are going to be talking about being in the financial market service, rather the financial services industry, and more so about securing your child's education and just smart planning in an uncertain economy. And with me is the amazing Rahab Wangaruro. Did I get that right? Ay. What did I miss? Wangaruro. You didn't hear that. Rahab Wangaruro. Rahab is a financial planning expert with Britam Life Assurance Company. Karibu sana, Rahab.
Asante sana.
And thank you for making time. I know it's a busy season for you guys. And maybe just as we start, you can introduce yourself, tell us what you do, and tell us how long you've been doing it, and you can tell us why you do it as well.
All right. Thank you very much, Ezekiel. My name is Rahab Wangaruro. I am a business development manager for the retail life business at Britam. And of course, it's a role that entails ensuring that we are moving our solutions, our great solutions, in terms of our intermediaries, the ones that do then move our products to the market, that they are well trained, they understand the products, and they are able then to move forward and give solutions that are fit for the market. So that is what I do. I've been at it on that specific role for the last 1 year and 10 months. But I've worked at Britam for a period of about 9 years within the training function. Again, just empowering the teams to do what they do. So when you see them, please receive them, listen to them. They are there to really add value and help you plan for your future.
Yeah. Thank you so much. If I say Rahab and Rahab, please, umejua nilienda primary school, wengine walienda primary school, wengine walienda group of schools, utanisamehe kidogo, but I'll try my best to get it right. And just beyond work, it's always good to know the person behind the role, the titles, and all these things. What do you like to do when you're not doing serious financial services things?
All right. When I'm not doing serious financial services, I'm a mom. I like to spend time with my children. I'm married. And I also really like to just travel. I'm a travel enthusiast. I like seeing different places. I used to like hiking. I want to get back into that. So I like doing things that challenge me to just also build the mental grit. You know, the role sometimes requires you to have the mental grit, you know.
Absolutely.
Yes, so it's an enjoyable role. Yes.
Okay. I always say kuna kwanga na cults fulani in Nairobi. The first ones are runners. They always try and get everyone to join them running. The second one, following very closely, ni akina nyinyi, hikers. You go, you post your nice photos in Mount Kili, then you're making us feel like we're not doing anything with our lives. Wacheni kwa hivyo. But again, very happy to have you. And we're just going to get into this conversation to see how, we can educate our listeners on the various things that they can do, especially because education has become pretty expensive. We see what's happening in the public sector as well, be it the capitation challenges, so school fees is not being paid on time, be it the funding model for the universities. Again, so I think you guys come in at a very good and a pivotal place for us to just have, the right products really to help people. So by way of starting, education has always been seen as the ultimate inheritance, And maybe my question to you is, why is it harder for parents to sustain quality education today?
All right, that's an interesting question. like you've said, is number one, the rising cost of education. If you think through the different systems, depending on the system you'd want your child to go to, we note that every other year you're being asked to, put more in terms of school fees. By the time the next year is coming up, there's a new school fees structure. With the new system of education, the CBC, we as parents who also maybe have kids in CBC,
don't even start. Don't even
you're aware of the nature of, resources you're required to have, facilitate this child, maybe even with a computer. You're being asked to bring in different, different raw materials for them to be able to create whatever it is they are engaging in. That puts, of course, some economic pressure on the parents.
Absolutely.
Then we also have the inflation rate. The Kenya shilling, if you think about it, 10 years ago, what you could afford with 10,000 shillings, today is markedly
different.
very, very different.
Yeah.
So there's the inflation element that also then puts pressure on the cost of funding education in terms of even the extracurricular activities that this child might want to be engaged in. The different shifting standards. If I want to transition my child from CBC or from the Kenyan system to a British system, again, that's something substantial. And then, of course, the uncertain economic environment we find ourselves in, where there are many competing needs for our resources, that also puts pressure when it comes to our ability to even sustain, school fees. So that's the way I would look at it.
And you mentioned a couple of things there that definitely affect us. Like you said, CBC every time, and I'm looking at the camera because whoever is watching, if you are within the Ministry of Education, please, let's be consistent. There are very many needs that keep coming, for parents to handle. But even above that, there's a prevailing economic times, and things are just getting harder and harder, and we find parents really struggling to cater for education, and we want parents to, every parent wishes to get a good future for their children. And so I think that is why this conversation is important at this time. And for those of you who are watching, we are here with Rahab, and we're just going to try and figure this out together, as so that we can, I help you, you help me, ndio kila mtu apate nafuu mahali. So my next question is, you're a parent, I'm a parent, we've all had a journey, so what are some of the financial mistakes that you have seen when it comes to planning for education and also for school fees? And before you answer, you've always had people wanasema January nafika na amekula school fees in December. Kwanza, now that we're going in December.
Yes.
So this is a good conversation for now. Ndio plan for January. Yes, Rahab.
All right. I think the first mistake is always failing to plan.
Yes.
Failing to plan, failing to have that thought that you can start small, start saving a little by little over time, such that, and I always say that school fees is not an emergency, but when you look at it, the circles will tell you.
It always is, Rahab.
The circles will tell you in December they give the heaviest loans, which are school fees loans, because people are taking the loans. They were not maybe adequately planned. There's also the element of starting late. I have an idea of, I want to have a structured plan to save for my child, but maybe I'm starting when the child is now requiring very heavy school fees amounts. There's the element of inflation, which we had spoken about, and the fact that depending on the system, resources really that are required are heavy. There is also extracurricular activities, which sometimes we forget to plan for. I always say, when you go to school and you're being asked to contribute towards maybe development of a building, you are supposed to, yes. But sometimes it's very painful because sometimes it's impromptu. So when we are planning, sometimes we don't plan with that in mind, isn't it? And then I always say, when you are expecting, as a lady, expecting a child, in 9 months for sure,
the baby will come.
The baby will come.
Yes.
And then the same way, life goes on. In 4 years, for sure, this baby will
School.
be in JSS, isn't it? Juniors will be they be in junior school.
Yes, yes.
Then in maybe 6 or so years, they're heading to or transitioning
Yes.
to a higher level.
Yes, yes.
But you see, when we are going through life, sometimes we are not thinking through what will be required by
Tunaenda
this child. Tunaenda tu.
like, as you know, as the things come, then we deal. You know, they say kesi mbele.
Kesi baadaye.
Yes,
Or we are
yes.
living the way God told us, I'll provide like the birds.
Yeah, yeah.
You know, so failing to generally plan, I
Yeah.
think, is the heaviest one. Then it really now then takes a toll on the parent at the point when heavy school fees amount
Absolutely.
is required. Yes.
Yeah. I think, and I'm speaking because me, I am a parent, but also now we are having this conversation. So I understand. Sometimes life happens, but just like you're saying, I think if we, like, you know, the old adage that says, if you fail to plan, then you plan to fail, you know. And so parents will always find themselves chasing their tails. And like you've said, excuse me, SACCOs can give you that data. And I'm sure it's more than, at least those ones who are going to SACCOs, at least that's a good thing. Kuna wale wa Shylock, kuna wale wa Jirani, kuna wale wa, you know, Tala and all those mobile apps.
Microlending.
So then what do you do? You know, what do you do to avoid getting yourself, and you already alluded to it about planning, but how best then do I make sure, and also when do I start? Actually, let's start with that. When do I start? Do I start before I get married? Do I start when we are pregnant? Do I start when the children? At what do you think is, you know, makes sense?
I think the best time to start is, you know, when you're already having the initial thoughts of, let me start a family, you can already then just start having a plan of these children, what will they require into the future.
Yeah.
You know, maybe we might get the children, you might not, but at least if you've already started, you can always put the money to some use.
Yes.
And like somebody says, the best time to plant a tree is 20 years ago. The next best time is now. So I always say you can start as soon as the children come and, you know, plan, walk with them during their lifeline, their timeline. Look at their timeline. In 2 years, in 3 years, what do they require? In 10 years, what do they anticipate? By the time they're getting to adulthood, university, what type of resources would you then require to set aside and putting into consideration all those factors we've talked about? There's inflation, there's extra costs, you know, there's upkeep, there's maintenance of this child. You know, they require so much. You know, the other day I'm looking at the young lady and, you know, she's saying, I need money for, you know, just going through the term. I need sometimes to snack on this and this. So you have to plan for them.
So you've had it. The best time to have planned is 20 years ago. Of course, you talk about a tree, but you get the analogy here. The next best time is now. This is Money Mondays. You're here with me, Ezekiel Olande, and Rahab Wangaruro from Britam Life Assurance Company, and she's a financial planning expert. And we're just having a conversation, you know, about how to secure your children's education and how to plan. I can't say smartly. How to plan smart. English inanipiga kidogo. Yes, in an uncertain economy. Now, Rahab, allow me to move to another question here. And, you know, many parents will still rely on savings or last-minute loans, as we have talked about. So what this it builds to the last question you've just answered. You know, what practical habits or systems can help them to plan more consistently?
Okay. Of course, the first is to have maybe the financial idea or knowledge that you can actually set aside some money, and you're trying to look at what is this structured way that can help me set this money aside. Then that helps that money grow such that when the need is there, then that money is available. So I think number one is thinking through an education plan as one of the viable you know, solutions that you can use to then have that system in place. But then, of course, this requires you to commit maybe over a certain duration of time, maybe
Absolutely.
middle term, 5 years, 10 years, 15 years, as you're looking through the
The
timeline
timeline. And
of
I like
this
that.
child.
Yeah, I like the way you've said it.
Mm-hmm.
The timeline,
Yeah.
and then knowing what needs you have,
Yes.
and then putting the resources to plan for that.
Exactly. So you're in sort of way working backwards. You're
Yes,
thinking
yes.
through when they're in high school, what do they require? How much will I need to have
Yeah.
as an education fund? How much when they're in university?
Yeah.
Those are usually the ones that take a heavier toll.
Exactly.
But then it does then require you to be disciplined. And sometimes we know when money is in our M-Pesa, we even behave a certain way.
Yes, 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 yes.
It comes and it goes. So I think one of the viable things to consider is maybe having a structured direct debit from your account. When money comes, when income comes,
Yeah. It
you
goes
can
directly
pay
because
directly.
ikiingia kwa simu
Yes.
ama kwa mkono,
Yes.
those are stories now.
Yeah, so you might want to have such an arrangement with your bank where you pay before you spend.
Yes,
because
yes,
then
yes.
that commits you to the financial
Yeah.
discipline you need to build that fund over time.
Yeah.
Some organizations also have what we call the checkoffs, where if you're on salary, the premium is deducted on the payroll. You see, so you might want to consider, can I put this education savings plan on a checkoff so that I'm not really thinking through it, you know? And there we'll look at it as we are going on. We will see there are some good benefits that come when you're saving over the long run. Like if you do an education plan for 10 years, you get a benefit called insurance tax relief. So the government of Kenya refunds you 5% of, is it 5 or 15% of your premium, up to a maximum of 60,000 in a year.
Okay.
That goes to helping you. You can plow back that saving back into your policy.
Yes, yes.
So you see, there are things you can do.
Yeah, yeah.
Of course, some also want to save in the bank or under the mattress, but there are demerits and merits to that.
And so I think one of the challenges that I know many people face is people who find themselves in not really the Juakali industry, but where your income is not very regular. You see checkoffs, like direct debit, so that means like a monthly or it's a predictable cycle.
Yes.
Yes, but what about people who leo nimepata windfall, the next 6 months kumekauka? How then do you structure this in a way that will still work for said benefits?
Ezekiel, that's an excellent question, because it then feeds into the structure of our policies, our education plan. So in the recent days, we have now what we call hybrid education plans.
I see.
Whereby you're not only limited to just paying a specific amount every month, but we have policies where you can pay as little as however much you want to pay. You can pay daily.
Yeah.
So we see people coming into some of these education plans, and we'll talk about one of those hybrid ones.
Okay.
And then you're able to set up even a direct debit on your M-Pesa, Ratiba service on your Safaricom.
Yes, I've seen that on the Safaricom app. Is it or the M-Pesa app? One of the two. Yeah.
So it's a service they give you to enable you to daily, weekly. So then we see those people who are in Juakali sector, the income is inconsistent.
Yeah.
You're then able to pay as you go. When you get money, you pay. When you have more, you pay more. Those are the hybrid plans that we're having in the recent days. Very interesting. And they work, and because you see, when Mama Mboga wants to educate her child, doesn't she?
Yes.
Yeah, she has a need. The border guy wants to go and have a plan that makes sure that his child is also going to school.
Is taken care of.
Isn't it? Yeah.
Okay. That is interesting, because I think people have always assumed that most of these products are the pre-serve of employed people. And I guess for the longest time, that was what was. But like now you're telling us now there are more innovative solutions that are coming up within the financial services sector and, your industry, that are allowing everyone to be able to save. So for those who are watching, umesikia, there is no excuse. She's even told you where you can do the checkoff. Ratiba. Go to your, I think it's the Safaricom, either the Safaricom app or the M-Pesa app, where they have a lot of some of these apps. Good stuff. So when no, this one you've already answered. So let's talk about building financial resilience. Life happens. And in this economy, we have seen, and again, job losses, illnesses come, even death. How then can families design plans that protect a child's education in the face of all these things? Because, you and I are here today, but only God knows what will happen tomorrow. And you still want, even, God forbid, if you are not here, for your children to still be able to live the life that you had planned for them. So how then do we do that?
All right. I think it's also looking through, when you look at the financial solutions that are on offer, what are the benefits really?
Yeah.
When you look at that solution that I'm asking you to consider, what is on offer? So we'll be talking about Sum Assure in just a while.
Yeah.
We do have what we call the investment-linked education plans.
Okay.
These are insurance savings plans, which then have an element of the investment savings element, but then they also have the life cover attached to it. And you see, this is important because you want, as you're saving your 1,000, 2,000, whatever amount you're saving regularly, number one, it is growing, so there is that investment growth element. But then you also want to know that as I am saving, in case of anything that changes the scenario within that family, I'm well covered. So what are those scenarios? So you're looking at maybe plans that have got, number one, retrenchment cover if you're on employment. We are looking at plans that come with death cover. In case of death, there's a lump sum to be paid to the family. And in case of death also, there's also what we call the waiver of premium. I'll be speaking about it. Waiver of premium, whereby Britam, can you imagine that? In case you have this plan, Britam and the insured has passed on, we step in and we say, this child still needs to go to school. Because those were the dreams and aspirations of this parent for their child. So Britam then takes over the responsibility of paying the premium for the remaining term. That's a key benefit that you should look out for when you're considering an education plan. Your waiver of premium on death, because it's what then guarantees that that payout at that future date will be paid because there was premium. Then we also have, risk covers like the disability cover. Somebody can be walking their head, they become disabled, and we see this. Critical illness. We are, having, I think sometimes I call them pandemics, whereby you're noting there's every so often you're being called, there's a family, there's a friend with a critical illness. Now, we all know in this day and age, critical illness can wipe out everything you have.
Your resources, absolutely.
Isn't it? Yeah, so you want to look at what are the other benefits beyond the saving elements that this policy accords me.
Absolutely.
So there's critical illness cover. Then there's also another interesting benefit called the family income benefit that also now comes in to replace the income of the deceased. Remember, this person has been providing for their family. They are no longer there. Do they stop living?
No. Yes. And life goes on.
Yeah, so you sort of insure a portion of your income such that in case of death, we pay an income to that family for up to 10 years. Then just making sure your dreams and aspirations are there for your child.
I like how you've packaged these products. And so then it means really for the person who's looking for these things, terms and conditions ni muhimu sana.
Yes.
For you to sit down and just understand. But the honest truth is, first of all, we never read terms and conditions. And also you might find someone who does not really give you that information that you need. So I guess here it's for you, because again, first of all, we're always told buyer beware.
Yes.
But also, it's important for me and you now Rahab, not the Britam expert, but just as parents, like when you're looking for these things, to do a bit of research and compare. And siku hizi kuna chat GPT, my friends. Unaangalia tu, unasema what you want, and it will give you the pros and the cons, so that now you can be able to take advantage of some of the benefits that Rahab is talking about. Because I really like what you have said. Ensuring my income, disability, critical illness, the death benefits, ensuring that the premiums are paid beyond, like, so kama nimeanza leo alafu kesho kimeumana, you will cover. That's on a light note. But again, this is very important because then it opens our minds to what is out there and what we need to do as we're seeking to get these things done. So
Yeah.
in terms of so actually no, this is something that is close to my heart, financial literacy. And I just wanted to find out, what role does financial literacy play in breaking the cycle of dependency and creating stability for the next generation?
All right. I think financial literacy, number one, and I always think through, what are those little habits we were taught as we were growing up?
Yeah.
You could see you are being sent to the shop, and then there's a car box where it was their coin box. So whenever you have change, you come in and put it in. And, it was always exciting opening that car piggy bank because
when
you've
it's
been
full.
saving.
Yes.
So you see, when we are already literate, we are then able to then teach the next generation habits that move them from dependency.
Yeah.
Isn't it? You're teaching them as they grow. So you're teaching them the power of savings. You're teaching them the power of planning. When you're literate, financially literate, I must then plan for the future I want. If I fail to plan, I'm
you plan to
planning
fail.
Yes. To just fail. Then, of course, like you brought it out earlier, is that when you're well informed, you make very informed decisions.
Yes.
And you see, we're in the information age. You can go research, you can Google, you can ask ChatGPT on any topic you'd want. And you can imagine, as you amass that knowledge, and those assets, you're then transferring them to who? To the children,
to the next generation.
The next generation. That way, you're then reducing the culture of dependency. You're very aware. If you've taught them well, they'll carry forward. And then you also teach them to be resilient. When you're financially savvy, your generation behind you, you teach them resilience. Isn't it? Because I have a boss who says, shilingi inamulikwa na ingine. So, bring one shilling, pull it from here, gather them over time. Let's do something big. So you help them, into that culture of planning, that culture of resilience. That's the way I would look at it.
Yeah, absolutely. Because I think all of us here are in a WhatsApp group or another for one reason or another, and there are those that, have come because of a death or an illness and things like that. And those, sometimes you can't avoid. But like you're saying, if we teach our kids well early enough, then this conversation then makes sense to them.
Yeah.
So hopefully even they will have planned for their financial future and avoid this black tax kind of situation. But you mentioned this has nothing to do with what we're talking about. But you mentioned putting money in the piggy bank. So when I was I can't remember how old I was, my brother and I, we would save to go and buy chips. But it was so rewarding that we have, so you look for money everywhere. Mneka, and chips was around, I think it was, I can't remember, 10 shillings or maybe something like that. This was, yes, I'm betraying my age. But so that really, it would excite us. And I think, again, back to your point, teaching delayed gratification and teaching people to think about the future, it helps. So again, I know you guys have financial literacy courses and plans. I think that is something also that we need to always have at the back of our minds. And so now we come to Britam. Sasa ni wakati wako, so that your boss can see how, you shining. And so for families who want structured, reliable tools, to secure their children's education, what solutions does Britam offer?
All right. I think even before we go into the solution, we must then introduce Britam. We are a diversified financial services company. We are into the education space. So we are doing education planning. We also are in life insurance. We insure lives. And also the assets. If you think through anything asset insurance, we have the general insurance business. But then we also do then help you, accumulate and grow your wealth. through the Britam Asset Management business.
Yeah.
And then we also want people to retire with dignity. You know, as you're
Yes.
working every day, we
Yes.
want you to think about the future. So we have the pension business. And then when it is then time to redistribute your wealth, you know, you've been going through the life rainbow, if you think through it.
Yes, yes,
and
yes.
we say our products span from womb to, initially we used to say
Yes.
to tomb, but now we are saying from womb to legacy. So we have
like that.
also
I like
the
that.
Britam Trust Services that then comes in to help you redistribute your wealth, you know. So we're thinking through
Yeah.
your life as an individual through the life cycle,
Yeah.
such that even when you're not there is legacy. The people behind you
Yeah.
are left with something. So that's Britam.
Even before you proceed, I think our next conversation should be about legacy planning.
Yes.
Because how many times do we watch on the news? Someone has rested.
Yes.
We don't know if he's rested because ameacha watu wanavurugana huku. So even in the afterlife, we don't know what is going on. And then now, people are fighting.
Yes.
Kuna wengine wanatoka from the woodworks wanasema, oh,
Baba yangu,
Baba
ni
yangu,
huyu.
you have seen this one who's claiming to be Kibaki's son. Now there's a tussle there. You know, we were making fun. And again, this is just me taking a tangent. During Baba's funeral, and Oburu coming and introducing his his second wife. Ndio ijulikane, we are not hiding these things. But on a more serious note, I think Africans, we fail to legacy plan because if today my child comes and asks me, do you have a will? Be like, you want to kill me, or
Exactly.
you know, kind of a thing. But really, like you've said, you say womb to the tomb, which is the reality. We need to think about, and I like the way you said the entire rainbow. You know, from the time you're being born to the time you're resting.
Yes.
Yes. I just thought so. Weka hiyo pin. Next time we will have a conversation on legacy planning.
Oh, we'll certainly do that. So it's from womb to legacy through the trust services that helps you then redistribute your wealth.
Yeah.
We've been at it for 60 years. So we are celebrating 60 years.
So
this
ideally
year.
you should be retiring. Britam should imefika retirement age
Yes,
sasa.
imefika retirement age, but I think things are just getting better. And we do this for retail clients. We do it also for corporate.
Yeah.
We have also corporate solutions. So if you're thinking through what does a corporate require, what tier 2 for our employees, group life, group medical, group pension, all these are solutions that we then do have. So if I come into your question, like what products then do we have to fund education?
Yeah.
Remember I spoke about hybrid, and I
Yes,
said
yes.
in the recent days you are coming up with hybrid products. So we do have an interesting product called Somasha, which is amongst many products that we have that cater for education. But today I'll be just speaking about Somasha.
Okay.
And it's an investment-linked insurance savings plan, as I had said, that combines investments.
Yes.
So as you're paying in premium, your 2,000, your 3,000, it also has some element of risk covers.
Okay.
Some are inbuilt, but some are optional. When I say it's optional, it means over and above the 1,000, you can be asked to pay an extra small premium to get you the additional coverage
that you need.
Exactly. So as you save your money, I'm interested in growing that money.
Yes.
So I pull it and we put it in the unit linked fund, and we go to work and make sure that as time is going, your investment is growing. So investment linked.
Okay.
Then a very interesting feature of Somasha is what I spoke about. It has the inbuilt waiver of premium on death.
Okay.
A client has come in, they're paying a Somasha of maybe 10, 20,000, just as an example, even 1,000 shillings, and they are no longer there. We come in, and Britam comes in and steps in and starts paying the monthly premiums, because you see your child still needs to go to school, even if you're not there, isn't it? Yeah, so that's a very interesting element. Then there's the investment return, which compounds on a daily basis. And we allow clients to interact with their statements on the customer app and the customer portal. So they're able to track then how is my growth of my education fund growing every day, every week. If you want to look at it every week, you have there.
you can go for it.
Yeah. So you can imagine the power of compounding interest over a duration of, let's say, 20, 10, 15 years. That becomes a massive vehicle to build a good fund. Then remember I spoke about tax efficiency. So for
Yes,
policies
yes.
that are 10 years and above, you're not taxed.
Yeah.
And also the return on your investment, being an insurance savings plan, is not subject to withholding taxes.
Okay.
Okay, so you can imagine the value you're growing
Yeah.
again over time from those tax efficiencies.
So you're saying when now I want to get that money,
Yes,
what I've been putting in plus what umeniongezea juu,
yes.
KRA wataniambia
No,
tuongee
because it's
kidogo.
an insurance
Ah,
savings plan.
yep.
And then remember, another area is we had spoken about is the various risk covers.
Yes.
So for sum assured specifically, you can decide, I want to add a critical illness cover. In case of a critical illness, we pay a lump sum.
Okay.
I want a disability cover. In case of a disability, again, we pay a lump sum over and above the
Yeah.
amount that you're saving. So these are extra benefits
Yeah.
you're adding on to make the policy really comprehensive. It also has a family income cover.
Yeah.
We had spoken about that
Yes,
earlier.
yes.
That replaces your income in case of death.
Yeah.
And the retrenchment cover for those who are employed.
Yeah.
Isn't it? Now, a key element of this plan is you can come in with 1,000, but time is going, your situation is improving.
Yes.
You hustle a little bit here and there and you get some money, you can always add to your
Okay.
policy. So it's not limited.
Okay.
It's a very flexible plan in terms of you can pay as much as you want to into this plan
Okay.
over time for the benefit of building this
Yeah.
fund. Then in case of an emergency, we also allow you can access the cash value.
Ah, okay.
Isn't it?
But now, yes, we've talked about naweza kuongeza premium.
Yes, sir.
Na there is a reverse also the same. Let's say I was doing 1,000 ikafika 5, but now things have become a bit tight. Now I want to go back to 1,000 or something in between. Is it that flexible as well?
Absolutely.
Okay.
So flexible. It's not the conventional type whereby if I say you're coming into this plan and you have to pay 3,000 every month for the rest of the policy.
Yeah.
So much is open. So it allows you to pay as much as when you have it.
Okay.
And then if you're not having it, again, you pay at your own pace. So it helps you work according to your situation. But I like the plan because remember we spoke about inflation.
Yes.
And escalating costs of education, isn't it?
Yeah.
Now, this is that one plan that then helps you beat inflation because it has the compounding interest element and it also has that ability for you to put in as much as you want. So as you know that a heavy bill is coming in the next 5-6 years, you can put in more today to be ready at that point.
Okay.
So that's so much sure.
So let me ask. So I've done so much sure, let's say for 10 years. And then now, let's say I wanted my kid to start accessing it when they're going into, I guess, CBC confuses me, but let's just say either JSS ama senior secondary. So do you pay a lump sum or now how do we then access the funds that we have been saving?
All right. So the way Sum Assured is structured is that you can decide a term. It can be anything between 8 and 20 years. That's your term of your plan.
Yep.
Isn't it? And you know what determines the plan is you should align this plan to number one, the point at which you require the school fees. So the way the plan is structured is that Sum Assured pays you 3 annual amounts, the last 3 years of the plan. Let's work with an 8-year plan.
Okay. Yeah.
So with an 8-year plan, it means
year
I'm
5.
taking an 8-year plan, but I'll start receiving payments from year
5.
6, year 7,
and then
and
year
on the 8th year, which is the maturity. So you're going to get an amount year 6, an amount year 7, an amount year 8, which is the maturity. So you see, you should then now align these 3 payouts to when you need
the payments to
come through. And then there's something I did not mention is that the last 3 years you're not required to pay premium. So it has a premium holiday the last 3 years of the plan. So as soon as you start getting the bonuses or the cash backs, you are not required to pay premium. And guess what? You're still on cover for the risk covers. It sounds too good.
It does. You know, sometimes people are like, "Ay, bibi naeka pesa hapa lakini sijui kama nitapata," and things like that. The other thing that you mentioned that has piqued my interest is you said when there's an emergency, you can get some money from it. Walk us through that.
All right. Remember, I said when you onboard as a client, the next element or the next thing we do is make sure that you're onboarded on the customer app or customer portal. These are self-service tools that Britam has given you to enable you service from the comfort of your home. So ideally, what happens is that when you log into your portal or app, you can be able to see your product. You know, you can be able to see your solution.
How it's doing.
You see how it's doing. And in as much as we are not saying you can, or, you know, don't keep withdrawing, you can access some of that money when there's an emergency to pay for, two, but then you continue making the payments. Because remember, the goal is to create a fund for your child, isn't it? But we do know that sometimes emergency,
life happens.
Sometimes life happens. But we're not saying life will happen all the time.
So life has happened. I've picked Kidogo. Does it affect my? It's called the sum assured, or not? How does that work?
It doesn't affect your sum assured, but remember, your sum assured ideally is your fund value, isn't it? Which you're growing by making regular premiums. So if you access then part of the fund, it means you have to really work hard to get you to the goal
to catch it up.
You intended, isn't it? Yeah. So of course, yes, emergency can happen, but they are not happening every day. We keep you really committed in terms of what is the purpose of this plan. Was it to fund your emergency or was it to educate your child? And you see, that's where then now we start saying over and above your education policy, you might want to consider also having a money market fund whereby you throw in your emergency fund, isn't it? That becomes your emergency fund account, so that now this sum assured becomes really just
purely for
goal oriented towards that education fund. You can look at it that way.
And for those who are watching, sherehe is not an emergency. Tafadhali, especially now. And you know, let me tell you why I like that we're having this conversation now. Because the schools have closed.
Yes.
We're getting into December holidays. We all know how we behave, myself included. It's like January is not coming. January from December is just 31 days away. And January comes, and then now we are just like, it's like we've just come from a coma.
Yes.
Na kuna school fees, kuna rent, kuna bills. Now is the time to plan. Now is the time to make all those, like Rahab was saying, if you didn't do it 20 years ago, start now. And ensure that you have your ducks in a row. And like we've said, please, sherehe, apana.
Sherehe is your emergency.
Emergency. So maybe let me ask this question as we begin to wind down. How do Britam's education plans balance investment growth with protection, and what makes them suitable for different types of families?
Or for different types of families. Oh, interesting. So the hybrid ones, of course, there is the heavier element, which is the investment fund, because remember that is what helps you build the that fund, the education fund. And I think I gave you examples where I said I can do a quotation for you. Maybe you're paying a premium of 10,000. Then when I do the additional riders, maybe I'm just asking you to add another 400 shillings. You see, so what I'm saying is that the insurance coverages, especially on the plan that we've spoken about, are very well costed. So you might find you're being asked to pay 100 or 200 shillings for a 1 million, 2 million death cover amount. You see, but over the time period, because you see, we are pulling yours, so we are able to spread the risk, isn't it? Spread the risk, and then also just price that risk coverage very well. So that's an element that many clients are really excited about. And this spans across. Even Mama Mboga, when you tell her this is the way this plan is working, she's excited because she wants to have a plan where when she has more, she can save more.
Absolutely.
Isn't it? But at the same time, she wants to know if she's not there, her small child Jerry will still go to school. So these plans cut across. The executive wants to have a good family income cover. His family is probably used to a certain lifestyle, isn't it? So he knows if he's not there, this family will take a big hit. So what does he do? He will add riders like the family income that then replaces his income. So we are saying it's a good balance, because it's a product that really just then helps you buy what you are
Yes.
interested
What you
in
need. Yes.
for the different needs.
Yeah.
And then allow me to bring in the
Go ahead.
point of the financial advice. Earlier, I know we were talking about them, and we talked about the fact that they are
Yeah.
here to help you.
Yeah. Yeah.
So when they come, don't chase them away. Don't chase our FAs away,
Yes.
please.
Please.
Listen to them. This is somebody who can help you actually really discern
Yeah.
and make a great financial decision for your family.
Mm-hmm.
And I've had very many good testimonies from clients who their families said, if it was not for this financial advisor,
Yeah.
we would not have benefited from this life cover when our kin
Yeah.
went
Passed
to
away.
be with
Yeah.
the Lord, isn't it? Yes.
Okay.
Yeah.
I like that. And yes, Rahab and I were talking just before the show started, and we're saying the way, kwa supermarket, you're there with your children, then someone comes and tells you, hello, I'd like to talk to you about, because they know, kama uko na mtoto, chances are that you're taking them to school and you want to, secure a good future for them. Listen to them. It doesn't hurt. Sometimes also, I think as Kenyans, we've become too brash. You might not buy, and by the way, I'm not making a case for Britam here. I'm just making a case for financial literacy. You might not buy from them, but they might tell you something that will help you. And I think that's what Rahab is saying. It's important just to pay attention. Listen, it doesn't cost you much. Mnaweza tembea hata mnaambia hebu nichukulie mkate, nichukulie hii as you're walking and talking, and you get to learn something, from these good people. Yes, so this is Money Mondays on Icon Radio with Ezekiel Olande, and we have had the pleasure, or we are having the pleasure, hatujamaliza bado, of having a very wonderful conversation on securing your child's education, and just talk about smart planning in seasons of uncertain economies, or rather economic trends. And Rahab is a financial planning expert with Britam Life Assurance Company. And Rahab,
Yes.
as we finish, what's the one piece of advice that you'd give to any parent who's listening now or who's watching and would like to secure their child's education?
All right. I think I'll just continually advise them and encourage them in case they haven't, started off on something. The best time to start planning is now, if you hadn't already started creating. So don't feel, this, I'm already too late for this. Start.
Yeah.
Bring that shilingi moja, 1,000, 2,000.
Yeah.
Let's start the journey. I think the most important part is starting the journey
Yeah.
to create that fund for your child, so that when they start then requiring heavy school fees,
Yeah.
it is not an emergency. You don't have to go selling your cow or
Yes.
your shamba, which you might sell under distress, to then take this child to school. So start now, plan.
Yeah.
Come, let's have a conversation, like I've said, with our financial advisors and financial advisors generally. Listen to them and start that bold step. Like I said, it can be a decision which in 2, 3, 10 years later, you're really seeing the value of. Yes. So that's what I would encourage them.
And just kuchangia. I think sometimes we get stranded in, because you think it's such a huge whatever you want to call it, cost element and whatnot. And so people get you're in your head, you're like, but I don't have the money to save. But I think because you talked about discipline, and I do agree with you, if we looked at our daily spend,
yes,
there's somewhere you can cut something.
Exactly.
There's, like, most of us, unfortunately, especially in this great city of ours, we tend to live above, beyond our means. And so you say, oh, I can't save, or you're waiting for that day, that day that never comes.
That
it
you
might
have enough, yes.
yes, but because needs are not stagnant,
Yes.
zinaongezeka. So, as Rahab is saying, you can start with as little as, I think you said 1,000
Yeah,
shillings.
with as little as 1,000
Yes.
bob.
Mm.
And you can pay daily, you can pay
Yes.
weekly,
Yes.
you can
Yes.
pay monthly.
Hata hiyo daily, even if my monthly is 1,000, naweza
You can do
yes,
the
umesema shilingi
build-up.
inamulika.
Inamulika
I
ingine,
really
so you
like
can
that.
do haba na haba. Or we call it lipa mdogo mdogo in Britam. So you can do that through, like I explained,
Yes.
Embratiba, or you can set up your DDs, isn't
Yeah,
it? Your
yeah.
direct debit authorities from
Good,
the bank. Huh?
good stuff, good stuff. And so for someone who has watched and is like, okay, let's have a conversation. How do we reach you? How do we find you?
How do you find us? All right. We are in 25 branches across Kenya. So whenever you look up, you might find Britam. So you can walk into a Britam and talk to one of our financial advisors. They'd be really happy to have you, asking them to take you through the Summer Shore Education Plan. You can also visit our website, which is www.britam.com. Isn't it?
Yeah.
Yes, www.britam.com.
Yeah.
Or lastly, you can send us a text message. So you can type the word Somesha on your messages and send it to 21778. If you do that and you're interested, and remember, we are helping you save. We are not giving you loans. We are helping you save money over time.
That is a very important distinction, Rahab, because mtapata watu wametext hapo hivyo wanasema sasa
nataka unisomeshe mtoto
lakini nataka sherehe ndio natafuta.
Yeah, so type the word Somesha and send it to 21778 and somebody will get in touch with you.
Yeah. Thank you very much. Any last thoughts before we land this plane?
Really just keep going, keep growing, keep improving, keep improving the nature of your thoughts, and take care of your health, take care of your mental health, take care of your physical health. That's what helps you put money on the table. So you must be a wholesome individual. Yes,
you've heard it from Rahab, just encouraging us. Yes, she could have come and just talked about money, but you have seen the expansion, and I really like that. Moving into health and mental health, because those are some of the things that really will determine how long we are on this side. All things are held equal. And so beyond just thinking about the money, because they say your health is your wealth as well. So I'm grateful for that. We are sadly out of time. Thank you so much, Rahab Wangaruro, for just breaking down this monster that is funding education, especially in the times that we find ourselves in. Rahab has told us, how you can reach her. She works with the Britam Life Assurance Company, and she's a financial planning expert. Please reach out to them. There are very many ways. If you don't remember, just Google Britam. They're literally just up the road here. If you know where we are, then you know where they are. So reach out to them, talk to a financial advisor, and start planning for your children's education. From me, Ezekiel and Rahab, asanteni sana, and we'll see you next time. Kwaheri.
all right, thank you very much.
Karibu sana.